Well, it's another fantastic day here in Sydney studio. We've got XM.com CEO Peter McGuire joining us for another fast 5 or 6 minutes of briefing. Pete, in the overnight trade, well, there hasn't been any because it's Monday, so we're opening a new day here. Asia Way will be coming online. You've got some notes in front of you. I suggest it's going to be a reasonably quiet data week, but let's deal with the what now, what next. What happened last week? How did it finish, and what's going to happen this week?
Well, good morning, Will. A couple of things. First off, we finished well as far as US equity. So they remained very, very buoyant. It's been a strong move to the upside again last week. So that's how they ended Saturday morning, though the unemployment numbers as far as that non-farm payroll certainly underwhelmed, and that wasn't a good sign. Leading forward, I think it's going to be a very, very slow grind up from, the Februaries, Marches, Aprils and Mays with COVID, and we had such a huge boom the latter part of last year with unemployment numbers that it's just a slow part of that whole recovery phase.
Right, look, run me through the big ticket numbers that drive the discussion, the signals, and the the thinking around the XM.com platform.
Well, we're looking this week as far as those CPI numbers coming out of the States. US dollars come off a little bit, so that normally is a sign as far as currency trading, and that's the largest market in the world. You've seen a resurgence as far as pound. There's been a bit of strength there as far as euro also, yen. So all of those markets, I'm very mindful of creating good opportunity. Gold's bounced well to the upside. It was quite heavily sold off. It's since bounced a little bit to around that 18.14, 18.15 number in Asia trade this morning. And Aussie's still at that 76 3/4. So that's where I'm looking at the market. Silver's tailed off a little bit. And one thing for sure, crude oil, very, very strong, nearly at that $60 handle, Will.
That's interesting, isn't it? You look at the rise and rise of the price of oil, and certainly there's some good conversations and some interesting stories. As we look at why oil is being driven up. Particularly, if you take a look at the FT weekend, you roll over to the back page of the business section, and basically you've got some commentary here out of the Asian market talking about fossil fuel exporters and energy transition.
Sure.
So we've got the price of oil going up. We've got a huge interest and focus in sustainability. And we've got a real parcel of of countries that are actually dependent on the sale of this thing. So there's a whole lot of transition to happen, and it's not just the world of clean and green. It is how do we make these sustainable steps or make these sustainable take these sustainable actions to drive better outcomes.
Sure. Well, look, that's the dilemma leading forward to 2050, and how it rolls is just, I don't think anyone's got the clear blueprint. We're addicted to crude oil, and we're addicted to cheap energies in the sense of coal-fired power plants and electricity consumption, 7.5 billion people on the planet. So that's just the nuts and bolts of it. And where we sit at the moment is crude is up, and it's a handbrake as far as spending power to the average consumer, and that really is a concern to very much the globe.
Big headlines, obviously, in every country, everywhere in the world, is the vaccine rollout. And here again on the FT Weekend Asia edition, we're talking AstraZeneca's mission to save the world. They're doing a good job.
Well, they are. All the big pharmas are when you're looking at how much as far as rollout, UK's head and shoulders above everyone else as far as the immunisation. So let's just see where it rolls over again, February, March and April, to give us a clear indication that Northern Hemisphere's summer period, and when do we start travelling, or when do we start doing the return to normalcy?
Return to normal. Mate, before we dive into a couple of the charts, talk me through the key commodities that you look at. What are the pricing, what are the movements?
Always copper. I look at that, Will, we've just discussed gold, we've discussed crude oil. So always copper, wonderful Dr. Copper, it's a barometer, still under that 8,000 a metric tonne. The consumption there, but I'm not expecting a lot over the next week or two because of Chinese New Year. Also, a lot of their strategic buying was done over the last, say, 3 to 4 months. Prices were very soft and they've been able to take advantage of it. So let's see, again, a clear indication. I'm not expecting a lot from a surprise standpoint. February is going to be a fairly quiet market time unless we see something dramatic happen left of field. And who knows? We're in financial markets, and that normally is the curse or the course of action.
The curse or the course of action, I like that. All right, looking at this chart on the screen here, we've got the US economy outshining the euro. Mate, talk me through it. The V curve there in April, the bounce back through June, July. It looks like we're travelling in a nice narrow band there through to January.
Well, exactly. Well, the the Eurozone has continued to be under that 50 threshold, and as far as the US is concerned, that 54s, 55s, it's going okay. So I think they're two different speed economies, and very much driven by stimulus and, of course, I think the geographic size of America. Whereas Europe is far more contained. So that seems to be the issue at play, and does that continue again over that first quarter?
All right, as we jump forward, we're talking about stimulus votes here. Was the dollar a mirror reflection of stocks? Is the dynamic changing, and are US fundamentals back in play?
First off, US fundamentals are back in play, and the stimulus has really been the entree, main course, and it's nearly a 9-course degustation menu. It's done everything to prop the whole economy up, and that's living reflection as far as equity prices at all-time highs, or US dollar being spanked to the downside over the last 8 or 9 months, and that just is the situation. I mean, I'm a little bit lost for words. I very rarely am, but I'm lost for words in the sense where how much more can you stimulate?
I mean, looking at this graph for a minute, you've got the US dollar index in blue,
yes,
which is taking a step back, and you've got the S&P 500, which continues to sort of sit up at those highs.
Yes, exactly.
So why the break in the inverse relationship there? I mean, it's correlated for a very long time.
Well, it was, but then you've just pumped it with so much stimulus dollars, and there's the point that US dollar was totally sold off, and that was really I think the starting point. Equities just went to the moon, and it's just been one-way traffic all the way from really that May-June period last year. Will that continuation across equities remain in this February and March period for the first quarter?
Mate, quick comment on US inflation, lift off or downgrade?
Well, I think it's probably a little bit of lift off, Will, and those energy prices worrying me at $60 a barrel. So that's something we have to live with, and at the present time, it's just the situation that we all find ourselves in. Yes, inflation will be I'm not suggesting the curse, but it's something. But then again, all economic cycles, we look forward to some form of inflation.
Mate, we touched on AstraZeneca and the rollout of vaccines earlier in the program, mate. But from euphoria to EU rows, it's the rocky road of the COVAX rollout, isn't it?
Well, it is, and you're looking there per 100 inhabitants. So UK, it's well and truly ahead of the curve, and it's really roaring ahead. So let's just see what happens again if the others catch up. There's many moving parts to the whole global equation at the moment.
All right, Pete. Well, let's wrap this thing. I think there's been some really interesting performance. I mean, crude, gold, this Aussie dollar, the New Zealand dollar, the euro. Look, some guys not trending super well, but the crude number. I mean, that's outperformed for.
It has, Will.
It's a big jump.
Well, you mentioned commodities, and that really is the driver. I mean, not a lot more has to be said. The graph tells the storyline, the first part. The second part is global consumption, and the third part is $60 the new normal? Are we going to break 60, or is that just the headline that we stay to? So it's really at that point. I think Brent's at around about 59.40 or so at the moment. So that seems to be the situation. It's a time will tell, and let's see where we are next Monday.
Well, Pete, let's see where we are next Monday. Thanks for being here. Thanks for having us. And, mate, thanks for sharing your knowledge.
God bless you. Take care, Will. Thank you.